If you look at valuations, many sectors are quite stretched, and I think looking at value can provide some much more upside. There's certain sectors that we like more than others, but I think finding strong balance sheets with very low multiples could play huge dividends going forward.
Matt, do you also agree? Are you perhaps moving more into value names?
Yeah, I would agree that the tech, rally is a little bit stretched compared to the rest of the market for sure. It would be hard for me to, when I look at the PE values and what the technology space has done relative to so many other sectors, that you wouldn't say now's the time to maybe rotate away from that and look for some names that can play some offense with an economic recovery, but also if we have any hiccups here for the next couple of months, could play some defense too. I think tech's done a great job of playing defense throughout this period, but it's probably not quite as offensive as it traditionally is, just based on its valuations at this point.
Naveed, what are some specific value sectors or names, stocks that you like these days?
So I think the sector that really stands out is banks. If you look at really the valuation there, it's really dislocated from the rest of the market. Really in the middle of a perfect storm for banks. If you look at the yield curve, coupled with the amount of reserves that banks now hold on their balance sheets. Also, if you look at potential revenue generation, a name like JP Morgan, which has a very strong investment banking business that would do well in times of volatility, will limit some of your downside. But if we do have a recovery and get through some of the issues that we have at the moment, you could have significant upside as much of that capital will be returned, and there's some normalization in the rate market.
Matt, it does appear that there are a lot of things happening all at once. It has been quite a year. What are your biggest concerns on the investment front? Of course, we reached that milestone over the weekend with COVID cases here in the U.S. We have the election coming up. How exactly we will all go to vote is still very much in question. And then, of course, you also have tensions brewing between China and the U.S. So what's top of mind for you?
Yeah, I think my top of mind is just helping clients navigate through what does seem like a bit of a wall of worry. It is really a uncomfortable time, and people are focusing on that election, and they're very strongly convicted one way or the other. And I hate to see people make decisions, with their portfolio based on an election outcome, because no matter the outcome, there can be success in the markets, and there can be failure in the markets. It's not a one-sided coin, if you will. So I think helping people through what is a scary time, and honestly, I'd like to see Congress get back together and get us a stimulus bill and a recovery bill that gets us maybe through the election or through the end of the year. As the previous guest was saying, that the current one gets us to Labor Day. That's just too short of a time frame. So, I do think that we want something that's a little bit more of a 3 to 5 month period that gives us a little bit of clarity through what's going to be an interesting time in the fall.